Association is a non-profit organizations incorporated to build the capacity of registered valuers, consistently doing programs for last 4 years. I still remember the first program of our Bangalore Valuers Association was done by our Gopala Krishna Raju sir. He has been a big stand and support for us.
Yes, sir.
And today we had a breakdown, and inside of that breakdown, Raju sir is pitched in to support us. With this, today's session is all about SFA category. So the strength will be only with SFA values. We are likely to have a lower strength in today's session because only SFA category class of values will be attending today's session. With this, I give back the session to Jivika to introduce the speaker. Jivika, up to you.
Very good evening to all present today. So today's speaker doesn't need any introduction as he is a well-known speaker and a famous personality in our professional field. But I have been assigned this responsibility of introducing him today. CA Dr. Gopala Krishna Raju is a practicing chartered accountant. He is a registered valuer, insolvency professional, arbitrator, independent director. He is the tax, assurance and restructuring partner of Messrs. K. Gopal Rao & Co. Chartered Accountants, which firm has branches in Mumbai, Bangalore, Hyderabad, and many other cities of India. He is a seasoned speaker and he has spoken on various topics like information technology, finance, taxation, and he has written articles and columns for newspapers and numerous journals. Yesterday also, there was a session from him. Today, the topic of the session is IVS asset standards, which deals with the valuation of specific assets and liabilities. We are delighted to have him here today again. And with this, I'll request Mr. Gopal Krishna Raju to begin the session. Thank you so much.
Thank you, sir.
Hope I am audible and visible clearly.
Yes, sir.
Yeah. Very good evening, valuer friends. At the outset, let me thank BVA, Bangalore Valuers Association, and IVF for hosting this program on International Valuation Standards 2025. And special thanks to N.R. Ravindranath and K. Chandrasekhar and for the nice introduction to Jivika Poddar. Friends, today's topic, before I venture into this, I have to make 1 or 2 points. Yesterday I was in Chennai, so my connectivity was good. Today I am not in Chennai. I am actually in northeastern part of India. So I am almost very close to Brahmaputra. But here some connectivity is there. So whenever my voice is not that, so kindly make it a point to inform me. I will take you through a very important standard today. This is ICA Valuation Standard 303, Financial Instruments. This came in 2018. And this is where sorry. Yeah. This is your IVS 500 Financial Instruments, which is 2022 standard. Now, if you look at both, it's almost same. Okay. It starts with objective, scope, valuation, methods, techniques, major consideration, overview, base, valuation approaches, okay, special consideration, and credit risk adjustments. Okay. Okay. So all this almost same. Nothing. You will see much difference. This is 2022. But I'll just share with you the 2025 standard. This is IVS 500 2025 version. My God. A complete revamp. I must tell you guys, it's a complete revamp. Okay. You can't compare an IVS 500 2022 version with IVS 500 2025. I'll say this is far more better in terms of coverage. And I will share with you something very important to begin with. This is a very important standard with respect to valuation of financial instruments. But if you look at the standard in 2022 and all, they'll start from the definition of financial instrument and all. It's not required actually. And one good thing about this IVS 500 is they don't define financial instrument. Why should I define? It's already known. So they directly go for valuation. Okay. There is no such steps called valuation here. And again, speaking about approaches, market cost and income doesn't make sense. Okay. Practically. So there is no such approaches like market, cost and income again repeated here. And you have 200 sections. Actually, it is 20 sections. Okay. And remove that. 20 sections. And almost each section has various sub-paras. And it's, I will say, a very important standard. It's almost a 15-page document. Of all the standards, this one standard is exhaustive. Exhaustive. And it requires, I will say, thorough reading, line by line, word by word. Word by word. So I'll go one by one. Okay. So let me first start with actually the only solace is this one paragraph alone is similar compared to 2022. Apart from that, no similarity. All are new. So I'm going to start with certain important aspects. Okay. And look at the scope of the standard. So I'll first start with the scope. Okay. For what purpose you can use this? Okay. And here they have not mentioned anything about the scope, but your IC evaluation standard, they speak about the scope. Okay. Evaluator shall follow the requirement in valuing a financial instrument. Actually, this is one thing which even your IVS 500 follows. This was not there even in IVS 2022. But our IC evaluation standards in 2018 itself, they have made this point. Which only in 2025 they have made this. This standard must be applied in all valuation of financial instrument. Must. Okay. Not limited to. It can be finance related, tax related, regulation related. This has to be applied. This is a mandatory one. Okay. Now let me go into some of the interesting aspects of this. Valuation, data, input overview, characters of data and input for financial instruments, selecting the inputs, using the data and input, valuation models. I will take one model actually, and then I will discuss parallelly. Okay. So let me take one model, and I will not show the name of the client, but I'll just keep that model alone for reference. Okay. Just to give you an idea how the model especially financial model will actually work out. Okay. Just take one. This will be an option valuation. So what I will do, I will not take the name of the company. So the name of the company alone, I will delete it. And then I'll use the entire calculation. Okay. Yeah. So this can give you an idea about the modeling part of it. Okay. So I have some aspect here. Yes. So 1 minute. I'll share the screen. Yes. Yeah. So I have a model here. So I will take this model for reference purpose. Okay. So, okay. So let me start one by one first. Okay. Good. Friends, I want to first start with one topic called as valuation risk, observable data, automated valuation model. Okay. Actually, in the entire standard, they have not spoken anything about automated valuation model. Oh my God, where is it? So where is my standard? So they have not discussed anywhere about automated valuation model. So there is only one place where they have used the word automation. Look at this. They only said highly automated using systematic mapping. That's it. But I'll just share with you where they used the word about the automation. This is one place. This is a definition. The valuer applying the professional judgment can produce an IVS compliant valuation. So if automated valuation model will not help you, unless and otherwise you have applied your professional judgment. Otherwise, it is not a standard compliant. Okay. It's some calculation report. It is not an IVS report. Okay. And I want to bring your attention to the definition of AVM. Please look at this. A model that provides an automated calculation. Okay. So AVM is one thing I want to, because before I go into the financial, see here, I am taking one model. Okay. This is one valuation model for Black-Scholes. Okay. So something I have taken, and I'll explain this, what this background of this, so that you will be in a position to appreciate how it is done. Because one is the formula, okay, structuring, then input. So the input, data and model, okay. So all three are very important. Okay. So this is a model, automated model, okay, valuation model. Please come to this, okay, valuation model, okay. That is automated valuation model. Okay, so I want to give you the fundamental difference between these two. Okay, come here. This is automated valuation model. I'll come for the valuation model. So valuation model is in 10.34. Understand the fundamental difference between these two. Okay. Now, what is valuation model? It is a quantitative implementation of a method in whole or in part that converts the inputs into output used in the development of a value. So here I have some inputs. This is the abbreviation. These are all some inputs. Okay. And have the output here and the option value. Okay. So something is here. So you have some output, you have some input. Okay. So quantitative implementation of a method in whole or in part, okay, maybe for one part of your valuation, use the model, not for the entire, into output, where input is will be converted, input is converted into an output used in the development of a value. So I ultimately come for one weighted average. So 296.65. I have some weighted average. Oh my God. So the vesting schedule is like this. So I'll explain this background, then I'll go for this valuation. Okay, good. So somewhere some modeling has been done. So here we have not used the automated valuation model. So this is a valuation model, a quantitative implementation. So this is implemented. Okay. Now to the AVM, because these two will be referred. Actually, AVM is not referred in the entire 15 page of the financial instrument standard. Okay. But valuation model is referred. Okay. Now, this is a type of model that provides automated calculation. Okay. So here it is implementation of a method that converts input to output. You implement something. Okay. Here, automatic calculation of a for a specified asset at a specified date using an algorithm. What is that algorithm? Okay. Have you applied the professional judgment or other calculation techniques without the value applying professional judgment? Very clearly they have mentioned. Very clearly. So AVM without the value applying professional judgment, because that is where your standard is very clear. If you are not applying your professional judgment, Govinda, it is not IVS. You have not followed the standard at all. Okay. Over the model, including assessing, selecting inputs, or reviewing output. Okay. Good. So I will value from the machine and I will do it. No, no, no. Machine is inside in your, not valuer is in the control of a machine. So AVM and VM. Okay, good. So now I will go for one more aspect. Okay, so before I go to the next. So this is the observable data, because sometimes observable data will not be there. Okay. So I'll take you to the observable data. Okay. Now what is observable data? Available data. So look at this. Sorry. Observable data. 10.20. Information that is readily available to market participants. Now who is called market participants? Buyer is a participant, seller is a participant, readily available. About actual event or transaction that are, please understand, observable data is not market data. Observable data readily available to market participant. Market participant is a buyer or seller. It is not mentioned here. They have not defined market participant here, but market participant means you will have a buyer, you will have a seller. A transaction means two people will be there. Readily available about actual event, about the actual transaction, are used in determining the value of an asset or liability. Remember, this is not market data. Readily available actual event, actual transaction that can be used in determining the value. So that means you have some information, some input is already there. Okay. So observable, take it. Okay, you call the client, I need 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. He will give because it is there. It is with him. So you ask him, he says, I don't have. Then what to do? Who are your competitors? Who are your competitors? He doesn't have. That means there is no observable data. So actual events or actual transaction. He doesn't have data. So what is observable data? Available data. Okay. Good. So now come to this. Yeah. Sorry. So let me take you to the valuation of financial instrument, which is para number section 30. Now please look at this. The valuer must use professional judgment. It is everywhere, it is there. There are a number of approaches to valuing financial instrument. Okay. In certain cases, values are observable, readily available. Okay. It can be published data. Example. Published data is one example. In other case, values are developed using industry standard models. Okay. Based on inputs and adjustment with varying degree of observability. For more complex, values may require bespoke models. Bespoke means you have to customize. You have to create a model. You have to create. Okay. So I can give you n number of examples, guys. Okay. Valuation of an intangible asset. Okay. Now, of course, intangible asset valuation may not come under financial instruments. So, financial instruments, I will take, it can be a ECL, because you have to arrive at the expected credit loss, and which you will subtract it from the receivables, okay, or from the advances. So, advances minus expected credit loss is your value. So, then how do you arrive at this credit loss? Okay. So, we use something we call it as behavioral analysis. Past 3-year data of that customer, past 5-year data of that customer. So, the variety of customers will be there. So, you classify the customers into some category of homogeneous category from a heterogeneous one. Are we developed using internally developed input or assumptions? In determining values, professional judgment may be required in the area of data and inputs. Okay. Look at the word. Again, professional judgment is required. They never use automated valuation model. Never. Okay. Use professional judgment to determine the nature and extent of effort you require. So now I'm next going to the next important word. Okay. So that is called as valuation risk. Okay. So what is valuation risk? There is a valuation risk exists in financial instruments. Throughout the valuation procedures and controls must be in place to enable valuation risk is assessed and managed to help ensure the value is appropriate. What is valuation risk? Okay. So let me take you to the definition part. Look at this. Valuation risk 10.37. Okay. Valuation risk. So what is this? The possibility that the value is not appropriate for its intended use. What is the percentage? Okay. So this also has to be part of our valuation of financial instrument. This has to be mentioned. So what is the valuation risk? Okay. Is there any risk involved? Because you put some data. Now you look at this model. Okay. So this is a vesting schedule. So this is about one ESOP calculation. So what is the date of grant? Now, fair share price actually is already calculated using some other. So this is already taken. This is your exercise price. So option term, risk-free rate. Now, from where risk-free rate is taken? Okay. From where this option term is taken? So these are all observable data. Observable. Okay. Now, interest-free risk rate. Observable. Because I will be taking this from maybe RBI site. Okay. Then stock volatility. Oh my God. Now this is one. This is actually a public limited listed company, means you can take the stock volatility. Now, if it is not a public listed company, but it's a private limited, how do you take stock volatility? So that's where your material says, I mean, your standard prescribes very interesting points they come. Look at this wordings. Okay. So professional judgments may be required in the area of data and inputs, valuation models, quality control. Sometimes be developed using internally developed inputs, internally developed assumptions. This 33% is based on some assumptions. You have to mention that. So which are input, which are actual, which are observable data, which are actually developed using industry standard model based on input. which are internally developed input, which are internally developed assumptions. I have to make it. So this model, actually this fair share price and this X, what we call it as the exercise price. So those are observable data. These are observable. Okay. And again, this fair share price decided. So now, depending on the nature of the financial instrument as well as frequency, the valuer may implement a range of processes which are highly automated using systematic mapping and data feeds to others that are highly manual and subjective. So this paragraph is very important. Depending upon the nature of the financial instrument as well as frequency, the valuer may, this word is very important, the valuer may implement a range of processes which are highly automated using system mapping and data feed to others that are highly manual and subjective. So, can you use automation or manual method? You may. So, it is not mandatory. So, depending upon the nature of the financial instrument being valued, but even though you do it, professional judgment is mandatory. And that already it has been mentioned for automated valuation model. Okay, good. So, this is one aspect with respect to this paragraph. Valuation risk is one aspect. And of course, this paragraph is repeat. In case you don't possess the necessary skill, experience, data, model, knowledge, this one is new. This was previously, this definition is taken from the specialist definition. In that model was not there. Okay, now come here. Okay, go to this. Who's a specialist? Skill, experience, and knowledge. Okay. Okay. This is the specialist, guys. But actually, here, come to this. Come here. Skill, experience, knowledge. These were the only three things there in specialist. But here, data model, you don't, this particular structure I'm not able to do. Well, presuming that, for example, this formula I'm not able to do. Okay, so look at this formula. So this is D1. And I have this weighted average option value. So, model. Can I give it to an external person? Yes, you can do. I can. Modeling alone, I can ask a specialist to do. If the value does not possess, I can take. Okay. So that also can be done. And I am now coming for, so specialist you can involve, valuation risk will be there. Okay.
So I have a question.
I will now
Can I
take you
interrupt,
to
please?
another, somebody is asking any question?
Yeah, I had a question. Can I interrupt, please? Sanjay
Anybody is asking?
from Bangalore. Yeah. Can you hear me, sir? This is Sanjay here. I have a question.
Yes, sir, you are audible.
Yes, Mr. Sanjay Gupta, please introduce yourself and put
Yeah,
your
I'm
questions, please.
CA and registered valuer Sanjay Gupta from Bangalore. My question is that when we are talking about this service organization, correct? So it can be another firm of chartered accountant who are good at modeling, let's say. So can we outsource this modeling part to them and then tell them, "Hey, look, you do the modeling and then we do our professional judgment on top of that and give the value." Is that something what is
No, I'm not
contemplated in
able
this?
to.
Are you able to hear me?
Yeah, I'm not able to. Is my voice is clear to
Let
you?
me check. Let me remove the headset. Am I audible now? Is it better?
Yeah, absolutely clear. Please.
My question was that let's say that
Please.
we have got a firm of chartered accountant who are very good, or a financial analyst, correct? They are good at modeling and forecasting and doing things like that. And here we get the data from the client, and we feel that that needs to be remodeled or
Yes.
a certain format. Can we outsource this work to that service organization? We may call them service organization.
Yeah.
And ask
Yeah, definitely.
spread this thing, give me some more inputs in and model it and then give it to me back, and then I apply my professional judgment and then arrive at the value. So today we struggle. Let's say I'm a company secretary, I don't know financial modeling that effectively, or an expert in a different field. I'm a land building valuer, I may not be expert at that, but this financial modeling I'm not very good at. So I can outsource to this service organization and use this as a to my benefit. Is that possible?
Definitely. So you charge X rupees of fee. So
Yeah,
that fee will, one portion of fee, 10%, 20%, will
yeah.
include in your cost. The service organization cost also will be involved. And after that only you arrive at that X rupee as your fee.
So today what is
But only
happening?
thing is in your scope, you have to mention that.
Yeah. Okay. Yeah. You should mention that in the scope, because today we struggle. Client give us data which is okay. No,
Yes.
are you able to hear me? Client gives us data today which may or may not be very polished, clean, correct? And we struggle with that at times, and we modulate and remodulate. So instead of us doing it, and then we can't review our own
No,
work, correct?
is
That's an issue.
is it only for me? Ek minute, ek
Uh,
minute, ek
uh,
minute. How
are
about
others able to hear me, or is it only for?
Jivika and Chandrash? Is it only for me? I'm getting this a distorted uh, voice from Mr. Sanjay,
No, we
or
are able
others are
to
able?
hear him clearly.
Okay.
Okay, sir.
So, so
Maybe I'll switch off
change.
my video. Can you repeat the last part,
Am I audible
Sanjay ji?
now? Sorry.
Yeah, please.
Hello.
Please go ahead. Please go ahead. Please go ahead.
Hello.
Yes, Mr. Sanjay, please go ahead.
Sorry. I just changed my net connection. So in this case, earlier we
Yes,
had
please go
difficulties in
ahead.
modeling, correct? And client used to give us, and we could not change their data because they have given us the data. If there's any changes, we ask them to do the changes. Here, there's a possibility of us giving it to the service provider and getting it polished, and then bringing it back into our computation. So that opportunity is existing now, is what I'm trying to say.
Absolutely, what you said is correct, Mr. Sanjay ji. And this has to be done. See, we have to come out of those traditional thoughts inside our mind. Now I'm able to see you, Mr. Sanjay Gupta.
Sorry.
So that
Yeah.
no. Once I get an engagement, I will do everything. No, valuation is a very niche area. So it requires specialist. Sometimes modeling may not be the cup of chai for the valuer. So you can
Correct.
take the help of, and there will be kacha data, and from kacha data I need to use certain tools to get it data, that what you call the data and input. Data will be 10 item, input will be only 4 item. So data to input will be given by the specialist or by the service organization. So these are the areas where our valuers have to focus. So it is not that no, only valuation engagement, only actual work will be, you will be doing the best work. You will be doing the value addition more. Sometimes you can charge more. So valuers may actually get a less value for their work. They certify. But the real work is, the technical work is behind this. So that is why a team is required. Today, valuation is not a single man's job. So maybe apni valuation, it may be a single man's job. But once you go for certain complex financial instruments, it requires, especially when we work with some of the very top companies of the country. So they
Mhm.
come up with the financial instruments. To understand their instrument, it takes a minimum 2-3 days for us. Hey, kya kind of instrument is this? So they will have a 0.00 three digit, fourth digit will be the interest rate. So it will be 3,500 crore CCPS, 3,500 crore CCD with interest rate 0.0001%. in textbook, we would not have seen that. Practically, it is there. Now we have to do the valuation for that. Now, how? Okay. So quite, it will be very interesting. So see, financial instrument is one area where people come out with very unique kind of products. So each engagement will be very, very, it's actually a learning experience. So,
Absolutely.
no. You give the quote. The problem with our valuers, I am with conviction, I'm saying, if somebody is asking you to give a quote, understand, then you give a quote. And your understanding will take minimum a day or two. What work you have to do? One particular, in my early days, it was one, the person, the particular company hire, the original, the consideration was, because he was actually asking me for an equity share valuation. The price what I actually quoted was because at the starting of my career, and the consideration which they were discussing was a whooping sum of 700 crores. 700 crores. That means that is the point I realized. My valuation report is such valuable. That means I was only giving some 10-page or 15-page information. I should have given him more inputs to substantiate that particular price. So only at the end I was able to understand the transaction. That was a learning experience for me. So the first and last, I will understand the transaction fully, purposefully, before I give the quote. Because then only my valuation report will actually serve the purpose for which they want it. Because my report goes outside. So when my report goes outside, it is not only my client's credibility, it is my credibility also. Together, I am actually breaking both. So that's very, very critical. So I have to understand the seriousness of the instrument. What is the purpose? So, and how it is structured. So it is not that I quote for A, the same I will quote for B also. It is not correct. It is not that. So today's financial instruments, when we deal with corporates, it's they will say CCPS, they will say CCD, they will say partly convertible, they will say sometimes they say non-convertible. Okay, they will say irredeemable. Okay, and at the time of issue, it will be redeemable. Then over a period of time, fourth year, fifth year, they pass one resolution, convert irredeemable to redeemable. My God. So then they will come for valuation. Now, so that means at the time of issue, it was different. Sixth year, it is redeemable. Ninth year, they are going to redeem it. So now you are at the sixth year or seventh year. So you will not find any example like this in any textbook. So quite you have, that is where this standard was making one observation. I was really happy. Please look at this. This thing. Look, in determining the values, professional judgment may be required. The area of data and inputs and quality control. And sometimes you have to design yourself. Okay. So values may require bespoke, custom are developed using internally inputs or assumptions. You have to develop on your own. Right. Now I'm coming for another aspect which is mentioned here, which is very important. Now please pay your attention to para number 30.06. As part of the valuation, quality control. Now, this is, I will say, very important. Okay, quality control must be in place. Okay, mandatory. They make it mandatory. Meaning quality control should include a degree of review and challenge. See, in our firm, valuation firm, we make one thing very clear. So the prospecting engagement will be one particular team, and then operations, there will be one team who has to do the the actual valuation. But before the valuation is signed, we have a very senior team, minimum 2 or 3, will only go through that valuation report. They'll review the process. They'll challenge. That means they'll act like a devil's advocate. Hey, why this value is overvalued, is undervalued? Why it should not be like this? Why the rate should be 6.5? Why it not be 9? Why it is RVRF risk-free rate is this? Why beta is 2.58? Why you have taken 3.20? It should be 2.58. So they'll put those questions. We have to answer that question. Why I have taken 2.58 beta? What is the reason for that? So the QC is a very important process. Please look at this. Quality control must be in place. Okay. The review and challenge should assess the process. Judgments made during the valuation determining the value. Okay. Including review of work performed by specialist. Including. So your point was very well noted, my dear friend. Who's that friend? Yeah, Sanjay. So in case I'm involving a service organization, the service organization's work also should be reviewed in the quality control. Okay, so that is another aspect that I mentioned. And I want to bring your kind attention now to input and data overview is almost the same. One or two, they are actually uh, okay. This is also same accuracy, complete, timely, transparent, same thing is there. Okay. But please come to 50.03. This one paragraph alone is important for data and input. The data may not incorporate all these characters. Sometimes it may not be a complete data. The valuer must assess data and conclude based on judgment, whether including assumptions, whether it is relevant for the particular valuation in accordance with the scope, method, and model and use. So use it or leave it. Okay, so you may have out of 400 inputs, 40 will be the data. Out of 40, you may only take 15. Reminder, you may not take. Okay, it may be data. So it may be input, but you may not use it for the calculation, valuation purpose or for modeling purpose. Good. Now, selecting the input. Now, this is, all these are new. The entire standard, I must say, they have revamped a lot. Okay. And especially with respect to inputs and also with respect to the model. Okay. And documentation also they refer. Valuation model. Okay. This is one place I really, and even it is here they go one more step ahead. Please look at this. This section 110, valuation model selection. How will you do that? Okay, so please come to this part. The process of selecting a valuation model, that is for the use involves professional judgment. Even the model. So here, I have one model here, Black-Scholes model. Okay, so this is the based on the share fair value. This is the fair value. Okay, this is it's already some calculation is done. This is one input. This is some data. This is some input. This is one of the input I have taken. Okay, and this is the expenses recognition in books of accounts based on the option value. Okay. So the fair value of options, the days lapse and all this calculation. So this is for the accounting purpose. Total number of options granted. So on the vesting schedule. Now, some model is created here. Okay. And this is the sheet one. I think this is the fundamental model. Okay. Based on this one, all other sheets are calculated. Everything is linked. Okay. Now come to this sheet. Process of selecting a model involves professional judgment. And remember, whenever such a model is created, and if you cannot copy paste one client's model and do it, you need to customize it. So once the model is created, the model is audited. Okay, so what we call it as auditing the model. Okay, auditing the valuation. So this is a very important step. Okay, come here. Process selecting. Now in this place, I'm using a word called auditing. Okay, you have to verify each and every formula here. Okay, test it. That is called testing also. That is for intended use. The potential for error necessitates the importance of sound and comprehensive process around the valuation model. Okay, so what if there is an error? So that is why we do a lot of testing here. So this auditing is fundamental. Okay, so no, it has been tested, copy pasted. No, okay, it is not an audit report. Okay, where you only change the client name and the year. Okay, so all this stuff. The selection of the appropriate valuation model includes the following process: design, develop, implement, test, calibrate. Okay, calibrate is where you will have some factoring. Okay, so you may add, subtract, less. Okay, based on recent transactions. Okay, ensure the implementation is consistent. Documentation. And in documentation, who created this model, when it was created, for each and every input, what is the source? Okay, so actually I have deleted many things here. We'll have the source also. Okay, from where this 112, because 1120 is actually keyed in data. This is keyed in. So that means you need to have a source. So from where it is actually. Look at this. So this is another thing. So we will need a source for each and every data. Okay, and document it. Processes should be in place when relying on valuation model developed by a specialist to assess such model to a similar level as an internal development model. Meaning, so Mr. Sanjay or Sanjay's firm has developed one model. So we engage Sanjay's firm to do it. So he gives us a model. So I don't directly put the input and then take the output. Then that means I'm not using professional judgment. So I have to do the auditing of that valuation model. So audit it, test it, whether it is working in all the kind of circumstances, the inputs. So on what is the formula he has used. So all this I'll be doing. Look at testing evaluation. Okay. So here, valuation models must be tested. These are all must. Process selecting model for intended use. So wherever the word must, I'll just take your observation here. Okay. The explanation there. Wherever the word must is there, documentation is must. Documentation must be adequate to allow another valuer to understand the scope, work performance, conclusion, because there is something called valuation review, process review. See, for quality control, you need all this documentation, how this calculate, how this working has been done. So better to actually have this. Okay. And if your valuers are distant apart, if everybody is in the same office, very good. Now is the quality control team is distant apart. Better to have all this documentation in digital form. You have to share it. Okay, good. So where am I? I'm here. Testing. Models must be tested. Testing is integral in determining whether the various components of overall functioning and performing as intended and must include. So generally, so many they actually ask me, sir, can you share this model? Okay. So one thing is, as an academician, I can share, but as a valuer, okay, sharing to a co-valuer, I will always prefer to say that, okay, when the learning will be done. Okay, if I create a model, I learn. Okay, if I adopt a model, can I learn it? So I need to know the fundamental steps, process, formula, calculation, testing methods. You put the test or testing, like you have to put test data. So meaning, for example, here vesting schedule, instead of say here, I got the value as 295 0.65. Okay. So now I will change this vesting schedule. Generally, because the loyalty will be less, loyalty will be more. So more I will be giving, the may will be more. So this is the model. Instead, I'll put 25, 25, 25. Look at this.
Hear me?
Sir,
We lost the
you're not
connection.
audible, sir.
I think we lost his connection. He lost his connection.
I think he's, we lost him.
Sorry.
He's
Actions.
back.
Yeah. Being in yeah. So now I'll presume that I'm giving 7% here. Okay. 10 here, 10 here, and 10. Okay. Another 5 rupees. So, and it is also okay, 10 here, and this is 22. So then 88 here. Now here 2%, 2%, 2%. So 6, 94 here. Value has come down. Look at this. So why it happens? Whether this valuation uh, uh, is acceptable. This is correct. Okay.
Sir, it looks some connectivity issue. Yes.
I think here the connectivity is unstable.
Yes.
So you have to excuse me with this because I was only locally, I could check that maximum within 7 o'clock. Beyond 7, I don't think we can able to do it. But I'm sure I've covered a reasonable part of the IVS 500. And this is a very important standard. So, and what I will just conclude with some 3 or 4 points, what I have done so far. Number one, every financial instrument valuation is 500, right. So it is a must. Second, arriving at the value for any financial instrument is critical. Third, that model has to be corroborated and testified. Next, in case the valuation model connectivity is unstable. So maybe I'll leave the floor to organizers, to BVA organizers to give the closing remarks for my session. And maybe any questions are there, I will take maybe before it gets cut again. Just one or two feedback about the session. We have very senior friends also here. We have Mr. Premnath Murthy. We have even young professionals are also there. We have senior professionals like AC Rautuji is there. So I'll just request, we have Mr. Ramamurthy Srinivasan ji is also there. So just we'll get the reflections from them before I close.
Sir, I have a question. This is Amarendran. May I raise a question? Hello, am I audible?
Yeah, please.
Yes.
Okay.
Please.
I am Amarendran.
Yeah, please.
Chartered accountant and SFA valuer from Chennai. Just the question on the applicability of IVS 2025. If I am to do a valuation as of, let us say, 30th September 2024, where for certain reasons the inputs have got delayed, would IVS 2025 be applicable? Because I think 10.27 in glossary talks about the valuation date being dates regarding the events which have happened. The point in time to which the valuation applies. Okay, that's what it says. 10.32. The point in time to which the valuation applies.
Okay. Now your question, sir.
Yeah, my question is, if I'm doing a valuation as of September 2024, and which I'm going to date today, do I still have to go by IVS 2025?
Oh, what is, I'm not able to connect your question. Your reporting date is March 25. Your valuation date is September 2024. So you can apply IVS 2025. In what context you feel that IVS may not be applicable?
Because the point in time to which the valuation applies is September 2024, which is defined in the glossary 10.32, valuation date.
No, that it says the point in time to which the valuation applies. It means, I'll just switch on my video also here. Now, I will take the example of
Sir, I think if you switch on the video, we lose
a
connectivity.
land and building valuer. 2000. Sorry. Okay, now let me take an example why we should take September 2024. I will even take 1st April 2001, which is a valuation done for the purpose of a capital gain, sir. I will do the valuation of 1/4/2000 today because I need that report because I will get the stamp duty value for the land. But for the building valuation, I will depend on the land and building valuer because I will not get the building value as on 1/4/2001. So I will go by the fair market value of the building, which will be the 1/4/2001 value. So now 1/4/2001 valuation is the valuation date, but my report date is March 2025. My appointment date is February 2025. So which I am using it. So the definition is point in time to which the valuation applies. Point in time to which the valuation applies. So the valuation date applies to 1/4/2001. Valuation applies to September 2024. So that is the meaning of that. So your IVS definitely applies. You can apply. Thank you.
Thank you.
So I will hand over the session because thank you very much, BVA, for the opportunity, second innings opportunity also.
Sir, 1 minute, sir. Sir, any other further questions? Because sir though he's traveling remote place because of we came to know around 12 o'clock saying that somebody is unable to take session today due to some unplanned issue. And when we requested Sir immediately within no minute, we sent a message, he has agreed because of to meet a contingency. Sir, we thank a lot on behalf of BV and on behalf of all the participants for making your session in spite of all challenges. Thank you. Thanks a lot, sir. Sir, now I think Ravindra sir, as you said, we have first day we discussed about the IVS groceries and also format ESG some changes. We have some draft valuation that reporting how to do as per IVS. That is a draft, not complete. So I think can we request Rajeshwara to share his views and on the reporting?
Yes, sir, we can do that.
Yeah, Rajeshwara.
Okay, thank you, Chandrasekhar, and thank you, Ravi. First of all, mine is a stopgap arrangement. I prepared diligently what to be presented. In case any mistakes, forgive me. I'm presenting my screen now. Before getting into report format, I'm just presenting to you what is there in Companies Act, what is there in IBBI guidelines, what is there in IVS 2025. Then what should be the final contents in our report. Then I'll display the formal report, like report how it will be. Can I go ahead?
Yes, sir.
As per Companies Act, we need to report background information of the asset being value. As per IBBI guidelines also, we need to report background information of the assets being valued, business interest and ownership characteristics. As per IVS 2025, we need to report about the client. So finally, we can include in our report citing client to include business interest, ownership characteristics. Then next item is purpose of valuation and appointing authority, both in Companies Act and IBBI guidelines. In IVS, it is agreed scope of work. In that agreed scope of work, we can write to include purpose, assets being valued. So this whatever IBBI guidelines they're asking to assets being valued, that we can club in agreed scope of work where it speaks about the purpose, for which purpose, suppose say we are valuing the equity shares for the purpose of issue of under preferential placement, or we are valuing redeemable preference shares, or we are valuing CCDs. So that could be the agreed scope, and liabilities being means assets or liabilities means that only CCD can be asset or liability. Like that we can specify. Next, this one is identity. If I'm rushing, you can stop and ask questions.
Yes, yes.
Next is identity of the valuer and any other experts involved in the valuation. As per Companies Act, even IBBI also say same thing, identity of the RV and any other experts involved. Even IVS says identity of the valuer, findings of specialist or service organization. We can club this into one, identity of the valuer, to include identity, conflict of interest, specialist if any, we are using and their findings in one paragraph. Even this Companies Act disclosure of interest and IBBI disclosure of interest, RV interest, can be clubbed into identity of the valuer only. There we can disclose our conflict of interest. Then in the Companies Act, we have restriction on use of the report. In IBBI, we have intended users of the valuation, restrictions on use of report. In IBBI, IVS, we have intended users, if any. This can be clubbed intended users, and also we can put restrictions in that clause. Who is the intended use? What is the intended use? Who are the users? And what kind of restrictions we are placing on? Next item is date of appointment, valuation date, and date of the report. In Companies Act, in IBB also says same thing, date of appointment, valuation date, and date of the report. In IVS, we have the date of the report, which may differ from valuation date, valuation dates. This we can club into date of valuation, date of appointment, date of report. In one paragraph, we can report.
Yes, sir.
Next consideration is inspections and or investigations undertaken as per like Companies Act. We need to report inspections or investigations undertaken. Even IBB also specifies we need to report inspections or investigations undertaken. In IVS 2025, we need to specify source and selection of significant inputs used. As per me, both are same. So we can keep one paragraph on source and selection of data to include inspections undertaken also. This we can suppose we are giving some global outlook, industry outlook from where we are taken.
Mr. Rajesh,
Please.
can I have one doubt in this? Inspection and investigation undertaken means is very clear. What is the document? What we say normally MOA and AOA, financials, audited, annual report, projections. Here source and selection is a little, source means assuming that we are giving some about the EBITDA multiples or some industry data. Then if we do have to provide the website details or research study, I think it makes
that is required. Suppose say when we are specifying how we have arrived at cost of equity. Cost of equity, if we are taking 10 years bond deal, from which, whether from RBI, some other private website you have taken. That source of information we need to provide in our valuation report. Suppose say beta you are taking. Beta, if you are using Professor Damodaran's beta for Indian industry, whether it is unlevered or levered, otherwise after considering cash flow impact also, that you have to specify clearly. Like source of selection of data, how you are taken, like how, like which web source from where you have taken that inspection and included here.
So then I think it is a very important for all the IVS valuation report issued after this new IVS. We need to give source for all critical data.
We need to give that source from where you have taken that information. Suppose beta from where you have taken or you worked out beta. Otherwise, risk premium. Have you worked out based on NSC, BSc data, or you have taken from Professor Damodaran or some other research reports? You have to specify clearly.
So, sorry, Sanjay, yeah, I have a question, if you can hear me. The question is really, we subscribe to these databases, correct? TrackCN and things like that, databases are a CMIE database. So if we are drawing data from there, can we refer to these databases in our report, or should we refer? Can or should?
We can refer, but actually we can refer, but yesterday, today or day before yesterday, they were telling about professional judgment. Before using, we need to have our judgment also. We can refer sources, but we cannot take shelter under saying that we have used that data.
It's tricky, yeah. What you're saying is correct. It's tricky, but it's correct, yeah.
So we cannot in public form, we cannot say directly saying that you can use it and close it, but we need to analyze also. Suppose for example, yesterday I was working for one company which is into cyber security model.
Okay.
I worked out cost of equity, or rather WACC. WACC has come around 11%. I referred to Mr. Professor Damodaran workings, it has come to 13. So 2% variation, I was okay. Like that. So I have taken Professor Damodaran back and closed it out.
So one strange thing that I came, I'm sharing I was looking at beta, and at one of the website, the beta was given 1.22. Beta typically ranges from between 0 and 1, correct? And this was higher than 1. So I mean, but it was there. So Yahoo Finance Fit was there for that company. So that really, I don't know how far we can say that we can rely on that and straight away take it into our calculation or not. But you're right. We have to then apply our professional judgment that this doesn't seem to be okay, correct?
Yes.
We need to do that. Like sometimes it can be lower than 1% also. In my case, beta is 0.91.
Beta can be more than 1 also. Only correlation coefficient will be between up to 1, 0 to the -1 to +1.
Yeah.
Beta can be more than 1. So
yes, it can be. It is only relation, no? How it moves, movement of our script.
Right.
Yes,
so variation, yeah, the variation can be between 0 and 1 in that case. Got that.
No, sir, beta can be more than 1 also, right?
It can be.
It can be.
Correlated with the market index, no, sir?
Yes, sir.
Okay.
Okay. Next is like we need to report, like as per Companies Act, we need to report procedures adopted in carrying out the valuation and valuation standards followed. Same thing is prescribed under IBBI guidelines also. In our report, we can report procedures adopted in carrying out valuation standards, and this is silent in IVS 2025. But IVS 2025 prescribes valuation standards followed. You have to specify clearly which valuation standards you have followed. If you have not followed, you have to give justification why you have not followed. So that we can report here. For example, suppose say like we are as a RV, we are giving report under 11 UA. We need not follow IVS. We can clearly specify saying that since I am giving report under 11 UA, I am not following IVS 2025. We can put that heading and qualify like this. Next is like major factors that were taken into account during the valuation. Both IBBA guidance note as well as Companies Act prescribe that. IVS is silent on that. We can report on that. Then IVS, Companies Act says that conclusion. IBBA guidelines also says that conclusion means you have to give your final conclusion. Which method you have adopted, what is the final value as per your judgment. Here, what is happening? They are asking, saying that value and rationale for value. This is what I am highlighting. This is nothing but conclusion only. So it will be last paragraph of our report. What is the value we have arrived and what is the rationale for that valuation? Nothing but conclusion. Concluding paragraph. Now we need to basis of valuation. We need to report as per Companies Act or IBBI guidelines. It is silent on that. So sorry, IBBI guidelines it is there. Basis of valuation as well as premise of valuation. So here we need to report in our report. Even IVS is prescribing that. So we need to report our basis of valuation and premise of valuation what we have considered. Then IBBI guidance note also says what are the significant assumptions you have made other than the assumptions given by the client. If you have made, suppose say, client may not be giving what terminal growth you have to take, what DLOM you have to take, what DLOC you have to take. These significant assumptions client may not be giving. You will be using your professional judgment to give that. That you have to specify clearly. For example, yesterday I was valuing a Class B shares which do not have voting rights and which have like 1% more than like equity shares dividend rights. So I have arrived discount for DVRs. So I clearly mentioned saying that I have arrived discount of so and so for arriving at Class B equity shares fair value. I have arrived based on these assumptions. So these significant assumptions will play like key role. You have to clearly mention. And I have mentioned also, okay, DLOM I mentioned this much. I have taken like this one terminal growth at this percentage. So that significant special assumptions, if any you have made, you have to report. Valuation currencies used, whether you are doing in INR or dollar, pounds, or whatever currencies you are doing, that you have to report. Sorry, it is repeated, valuation currencies used. Then valuation approaches adopted. Valuation approaches, income approach, market approach, or cost approach, which approach you are adopting. Then valuation methods and models applied. These two are silent in IBBI guidance note as well as Companies Act. Valuation methods, whether you have, in case income approach, whether you have taken DCF or other income methods, that you have to report. New factors, significant ESG factors you have considered. One is like what you have to elaborate on what are the ESG factors as a global this one and specific to the client. What kind of ESG factors specific to the client you have considered? For example, I was valuing a company which is developing an equipment which will detect using artificial intelligence, which will detect kidney failure at early stage. For example, they're undergoing surgery. They would have given a lot of antibiotics that may create acute kidney disease. That may lead to other organs failure. But if that equipment is there, it will detect. If kidney failure started, it will detect. So while factoring ESG factors, I have written clearly saying that it is in addition to like whatever medical equipment is there, it is facilitating the human lifespan. So we can give more weightage to that ESG factors than discounting, like providing a discounting factor. It is a positive approach. Like that I have reported. So specific to the client, we need to report. Then,
Mr.
huh?
This ESG, I know this new one. Do you have
Yeah.
any draft format or what is it? It is too wide concept of ESG. Any format or of a draft report, what needs to be considered essentially in the report, because this new change. So, do you have any format or any suggestion?
Sir,
I am
on this ESG point itself, may I add something? Sir, if you could elaborate
please.
on this ESG point a little bit more, like Sir just mentioned, this is a new concept to be included in our reports. What all are the aspects we ought to be taking care of? How to frame this appropriately for our report purposes? And what would be because you are too used to this concept, what would be the optimum discounting factor that we should opt for? Let's say within the range of 1 to 5%, 1 to 3% would be good, or 1% would be too high, and something on those lines, sir. If you could throw some light around this, na, it would be favor, sir. Thank you.
I am also learning, strictly speaking. And Dr. Garg was mentioning, saying that like 3 factors we can, 10 base points we can keep. For environment, maybe 4 points based on the industry. If environment is not impacting, we can keep only 1 or 2. Social impact, we can keep 3, 4 points. Then governance. Like this, we can divide. Suppose say like only family business run business, generally we will have governance issues there because it's a family run business. There we can give more discounting factors than environment and society. Like that we have to factor. I am also not fully thorough with this subject to throw more light on this.
Because like it's say sort of nowadays all computer chip based things are there. So definitely, in case I am a trading company and I am marketing all these automated machines, etc., which are running on chipsets and PCB printed circuit boards, etc., etc., and I am not obligated to buy them back. So that would be down the lane will be some kind of environmental hazard will be there. Whenever this machine is disposed of down the lane, as I am not obligated to buy them back for this on this ground itself, for my environmental discounting factor, let's say I should be opting for 1 to 2% of my value. I should be eroding that off. And something on those lines, if you could really add, or anyone for that matter,
Okay.
I would be more than happy to hear on this front from anyone, in case any fellow professional wants to add anything out here.
Sir, I'll give one more example. I was valuing for a company which is into diagnostic services for cancer patients. How I followed process for ESG, I'll tell you. They were like, the moment I written to them saying that I need to have some write-up on ESG, how you are complying. First of all, they were not aware. Doctors, all are oncology doctors. They like came back saying that what is ESG? You only explain, then we can give the information. Then I written to them. First of all, like environment, do you have proper biomedical disposal? First question I have asked. Then they shared an agreement signed with a biomedical waste disposal company for 2 years. So first impact is for them is the biomedical disposal only, environmental issues it creates. And that I consider it is a positive. So I didn't give any discount for that. Then coming back to social impact. Social impact, I asked how your company is different from the other companies. They told we are providing at affordability. Suppose say PET CT scan is happening at 20,000. They're telling we are providing at 10,000 only. So it is helping out the patients at a reasonable cost to detect their otherwise diagnosis in case they have some kind of symptoms, cancer, this one. So that is helping the society. Governance factor. Governance factor, I asked what kind of licenses you have taken from the government to run your business. They like whatever license they obtained from the government of like state government and central government for to run this business, they have shared. Only leftover is except like again not well professionally managed. I qualified that it is some kind of a family run business, but they're applying with the governance principles, but somehow it is questionable. We cannot comment on that. But I stayed away from giving any discount this factor because I am happy with environment and society. Governance, we cannot like it is subjective matter. We cannot question on the basis saying that it is a family business. So it is depends on client to client basis. So we cannot generalize, but as Dr. Garg was telling, we can keep 10 points for discounting factor and put tick mark. Suppose if they're complying, don't give any discount. If they're not complying, you can, and openly like sometimes what happens, we may have to work out on like discount factor to arrive at particular value. At that time, it may be useful for you as a professional. Other way around, I'm telling.
So,
we cannot generalize. It will be dependent client to client. One more client, I was helping one more senior professional. He was valuing a company which manufactures beds. Our this beds, they were manufacturing beds, so there is hazardous chemical usage is there. I asked him to check whether what is that disposal mechanism, whether they're taking any insurance for employees, because the moment they're working in hazardous this one, their health will be impacted. With that, there will be always fatal deaths. How they're going to compensate? Because in a month, 10 deaths are happening. If you're paying compensation with labor court, all those things, your business will go for a task, whether they have any mechanism for that. So we need to like case to case basis, take out the details like this. We cannot generalize. Then they came up with something saying that we are providing medical insurance, we are providing ESIC, but we don't have any this kind of liability insurance to pay to the family in case any fatals happens. So we worked out a discount factor. So we need to see case to case basis. We cannot generalize, and you have to you have a scope to play around with your discount factors to arrive at a particular value which you are asked for.
Then, Mr. Rajeshwara, then since we are valuers, we are not a masters in the ESG, then we need to get the train. Suppose before, as a part of our evaluation, if a company is into the service sector, manufacturing, or hospital industry, then we need to know more about the ESG compliances, then adopt whether for that particular company is applicable or not, appropriate disclose in the report, take appropriate measures. So is that the expectation?
More than that, I'll tell you now, like how IPA will become CEO of a business. Valuer also has to understand the business dynamics clearly, then only can report on ESG. Otherwise, it would be very tough. What business they are into, what kind of threats, there could be possible threats, like to the society as well as environment. So we need to understand those complications first, then only can work on ESG.
Okay.
We need to understand their business more than compliance mechanism. We need to understand their business, what business they're doing, what could be the complications to the society and environment. Governance factor is something different. We can always write some story, but environment and societal impacts, we need to understand their business, then only we can write something or take out some factors for discounting.
Yes, sir.
That's the reason I'm giving examples. Each client example I'm giving, each client how I dealt with.
Yes, sir. Thank you. No, we are looking, if I got any form, draft reporting format, it may help us.
What I'll do, I'll share with Vijaya, because there is a format now. Immediately I cannot display on the screen because client details are there.
Sure.
2-3 formats I'll share with Vijaya. She will share with all the participants.
Okay. Yes, sir.
Anything on this further?
Sir, respectfully, could you please take this slide before this?
You want me to scroll up?
Yeah, if you could.
No. Tell me, this is beginning.
Mhm. Yes. Great, sir. Thank you.
Sir, can you also provide the soft copy of this Word file?
I'll give.
Okay.
It is not my IP, I'll give.
Appreciate, sir. Thank you.
Thank you.
Thank you, sir.
Rajesh,
Now,
Rajeshwaraji, can I ask one question? It's time.
tell me, sir.
Sir, when we are computing the discount rate for the purpose of ESG, so that discount rate has to be calculated at the end, correct? Based on what is the environmental impact, social impact, and governance impact, correct?
Sir, like as per me, you will have one discounting factor called the company specific risk premium.
Correct.
In that it can go. If you really want to give some discount,
Yeah.
in CSRP you can include this discount towards ESG factors.
Okay. So no need to specifically mention as an ESG discount or something like that. I was just
That only,
clarifying.
sir, when you are working out CSRP, one is
Correct.
business, the other one is
Correct.
governance, ESG risk you can add.
Okay. Thanks, sir. Thanks for the clarification.
Okay. Thank you. Now,
And
the other point.
sir, one more thing. Sorry. Extremely sorry.
No, you continue, sir. Continue.
So when we are drafting an engagement letter, at that time also that ESG thing should, actually be there in that engagement letter.
We can ask, sir. We can ask what kind of measures they're taking towards environmental protection, what kind of initiatives they're taking for social impacts, what are the government governance norms they're following. We can ask. They may not come forward to give. Then we need to study, and again specific questions we need to shoot. But as you suggested, it's a good suggestion also. When we are signing engagement letter, otherwise when we are shooting checklist to the client for information, in that instead of writing only ESG, we can write specifically saying that we need information on these points. Is your industries environment friendly? Otherwise, there is some kind of environmental issues will be created. If then what kind of issues you are facing? Suppose environmental issues are being created. For example, initially we can ask, do you have all pollution control licenses? We can ask, nothing wrong in that. So that is a basis for us to study and further dig deep into the environmental issues. Social norms also we can, for example, we can ask whether CSR is applicable. For example, out of this thing I'm telling you, whether CSR is applicable. That is also one of the social norms, right? So if CSR is, if they're giving, then how they're implementing, all those things we can study. That will be covering both social as well as governing norms. So we need to we can shoot in our checklist this kind of information to be sought. Based on that, further we can study and ask for further details.
So generally what the client says, Pradeep, ESG to hote rahega. Just give me the value.
Sir, that only, sir. For repetition's sake, I'll repeat. Really, I was shocked. I was supposed to give a report to a professionally managed company with 3-4 plants across the India. Literally, they'll be using hazardous chemicals in the plant. The moment I asked ESG reporting or ESG this thing, in general statement they gave saying that no, we don't have any that kind of reports. Then I Googled it about that company. I found a beautiful report on ESG. It is based on 2021. Then I sent that email to the concerned person saying that, see, look at this. You have ESG report in 2021. You share the updated report. Even then they were not coming forward. Then I said, I cannot give my report.
Okay.
Better you cooperate, otherwise I cannot give my report. Then they had a meeting. Then they finally told saying that yes, we have a ESG manager. It is little bit tough, sir. Practically, valuers will get into push you to the corner to give reports, but we need to be little bit like chalu hona aata.
Because generally what happens, our efforts have been doubled because of this ESG on one side, and when we speak about the fees, and that is not increasing, but our efforts are increasing definitely.
But now it is up to us to show this as a element and increase our fee. Saying that we need to know ESG valuation also.
No. We came to know about all those things. Thank you, sir.
Sir, one question.
Tell me, sir.
Sir, you have to tell that this ESG consideration is to be taken in the company specific risk factor. Do we have to combine them, or separately we have to company specific and separately show for this ESG factor?
Sir, we can club it, but back end you should keep this workings.
But sir, how much factor is to be taken? 1%, 2%? What how to exactly give the percentage for that? Main issue is that although we get the information from the client, is there any thumb rule or any standard mark? What if there is any good condition complying, so then we have to give 1%, 2%. Is there any standard, or just randomly 1%, 2%, 3%? What should we have to consider before giving the percentage? Although IVS has made mandatory that we have to take a consideration of all of these factors.
SFA or land and building value, sir. Sir, your SFA value or land and building?
No, I am SFA.
Sir, we'll speak openly. This CSRP will be playing around to arrive at back for certain valuation mechanisms, right? So openly I'm telling, you have to play around with the CSG factors. No one will tell you, any speaker practically saying that this you can use like this.
Okay, sir.
Hope it is clarified to you.
Yes, sir.
So we cannot discuss openly, but I'm telling, sometimes it is for our advantage only.
Okay.
But you have to have your backup workings. Backup workings, you keep your backup workings. How you have arrived at, suppose ESG, you are reporting 2% discount, 3% discount, whatever it may be. Keep proper workings, that will help you. But you can club in CSRP as a whole, then use that discount factor for your arriving at cost of equity.
Okay.
Any further doubts on this?
No, sir.
Thank you, sir.
Next,
Thank you.
I have a small doubt.
Yes, ma'am.
With respect to a simple thing like restriction on use of the report, we have one requirement. Another end, we have intended use of report. Meaning is same only. So can I use as a...
Not like that. Both are not same. You can ask second question. First, I'll clarify this. Intended users, we are telling client for the purpose of reporting to authorities under Companies Act or FAMA or income tax, whatever it may be. That is intended use and intended users. Okay. Restriction. This cannot be reproduced for other purposes other than this intended use. It cannot be used by other than my client. Others cannot be used for any other purposes. This is restriction.
Okay. So both should be there in our report.
Yes.
Okay.
Next question.
That's all. I thought both are conflicting. So whether should I use that or should I use this? Now I understood I have to use both.
Overlapping, but language is different.
Okay. Okay. Got your point.
IVS compliance statement, we need to give this statement. I'll display also what kind of statement I'm giving. IVS compliance statement we need to give. Then finally we need to give our concluding remarks, what we are concluding. This will be the content. I'll share with Madam Vijay. She will share this file with everyone. Any doubts? Otherwise, shall I go to displaying the report?
Sir, proceed, please.
Thank you. This is client details, like whatever we are reporting, what I told, no, client details. What is client, their SIN number, what business, registered office, capital structure, shareholding pattern, details of the directors. This will come. So entire background will come here.
Sir, this is okay. I think we are more interested in the ESG reporting. If you got something, it may help.
That I'll display give sometime. Okay.
Yes, sir.
Scope of the work. Giving like this, it has been informed by the management the proposal for the issue of equity shares come like this. Like you can read others. If you want me to read, I'll read also.
Okay.
The valuation date also reported here. What is the valuation date? Identity of the valuer, any other specialist, service, organization, or expert involved in determination of value of the equity shares. Date of appointment, valuation date, and date of report. Intended purpose, use and purpose. The conclusion of equity share value derived as a result of this engagement will be utilized for compliance and reporting under Companies Act 2013, including rules and regulations made thereunder. The valuation report does not reflect a value of the subject interest under any other circumstances other than those described in this report. Therefore, no other purpose is intended or should be used. Inferred. Intended users. Distribution and use of the valuation report is restricted to the client and to the appropriate authorities in connection with the compliance of the requirements of statutes as stated above, if required. The valuation report shall not be distributed to outside parties to obtain credit or for any other purposes. Possession of the valuation report does not carry with it the right of publication of all or part of it, nor may it be provided to any third parties other than in connection with the required judicial procedures. We do not assume any liability, obligation, or accountability to any unauthorized third-party users of the valuation report under any circumstances. Madam Shilpa, I think your question will be more clarified here.
Yes, correct.
Okay. Valuation currency in INR, valuation standards followed. Valuation is an act, something I am writing. Then for the intended user, the valuation standard 2025 as issued by IVS has been followed. Valuation, the act or process of forming a conclusion on a value as of a valuation date that is prepared in compliance with IVS. Academic outlook, industry outlook, inspections or investigations undertaken, source and selection of significant data and inputs used, significant USG factors and company-specific risk used and considered, procedures adopted in carrying out the assignment, basis of valuation and premise of valuation. This everyone knows, I need not repeat. Approaches of valuation, caveats and limitations and disclaimers, significant assumptions made, special assumptions. This is new concept. I'll read. Where assumed facts differ from the existing at the valuation date, it is referred to as special assumptions. Special assumptions are often used to illustrate the effect of possible changes on the valuation of an asset. They are designated as special so as to highlight a valuation user that the valuation is contingent upon a change in the current circumstances or that it reflects a view that would not be taken by participants generally on the valuation date. Keeping in view the scope of work and intended use, no special assumptions have been considered in the valuation exercise. IVS compliance statement. The valuation of existing shares of the company has been conducted in compliance with the provisions of applicable valuation standards as prescribed by IVS. This is then critical. Generally, for my reports, I'll add this critical information. Suppose if they given only provisional balance sheet, I'll write saying that they given only provisional balance sheet. If they given audited balance sheet, valuation may differ. Otherwise, if I'm getting entire valuation from terminal value only, I'll write my entire valuation is coming from terminal value. Otherwise, they're in only ideation stage. The company is into ideation stage. They are at to test the market. Like that, I'll qualify. In case I need to qualify, I'll qualify in the critical information. My way of reporting, that is valuation of equity shares, then rationale and conclusion. This also I'll share with Madam Vijay. She can share like for your consumption.
Yes, sir.
Sir, if you're okay, maybe you can post it here itself in the chat box, so that if someone wants to download from here, they can do it right away.
I'll do it, not an issue.
Yeah.
Just a minute.
Yes, sir.
Actually, Mr. Rajeshwara, you shared this file in Dr. Ajay Garg session also, no, in the chat?
Yes,
Yes.
I shared, but no one commented, so I left it.
No, no, I have seen this actually. Thanks for sharing that day.
Yeah. Rajeshwar, any further or do you have anything further?
One ESG, what I'll do, I'll not display because I have to edit and display client information is there. I'll share with Madam Vijay. She can share with every participant that ESG report what we have done.
Yes, sir.
Value.
So,
One minute, I'll just a minute. Okay, you can continue to talk. Okay.
No, if you want to discuss it today, otherwise we wanted to hear from Abraham sir about his any closing remarks, any suggestions, and about the BVS, BVA, how is going on, and also any how to implement further IVS. So we wanted to hear from sir. So if you are completed, we can request sir.
You can continue. Someone can take over, and I'll be sharing here. Okay.
Yeah, sir, Abraham sir, I think we want to hear you, sir.
Oh, Chandrasekhar, thank you for that. I mean, like all of us know, all of us have been long-time members of BVA, and we are the main advantage of BVA is that we are all practicing valuers, and we tend to share our knowledge and experience with other valuers, and each one of us learns from the practical situations that others have faced, and it helps us in improving the quality of our professional work. This for me is the biggest thing in being a member of PVA, and I always benefit from being in these sessions. That's all I really have to say. I want to thank everybody who has really participated in this by asking questions. So, for instance, Mr. Rajiv or Sandeep Agarwal, many Sanjay Gupta, of course, is always a person whom I always notice ask the questions which are quite interesting. And so thanks to all the people who have done that, and the people who have shared the information like Rajshekar Rao is it's actually quite nice to hear you speak. So thank you. That's all from my side, Chandrasekhar. Please take over.
Thank you, sir. Sir, any other members want to share anything about IVS or any points connected to BBA or any sessions for future sessions? Now, I think we are finding a lot of challenges in our valuation profession for reporting, and people expectations are more. Maybe president can say, subsequently then members can give their feedback for improvement or for any suggestions.
Yeah, as Chandrasekhar sir, first of all, I want to thank you. I mean, it was your initiation, your enthusiasm and passion, and the way you structured it was quite good. All the speakers did well. I think the first speaker was also very much interested to take another session on IVS and ESG aspects. I think I want you to consider that and request him to speak more about these aspects, because ESG considerations in valuation is a new thing for most of us, and more sessions on these amendments will be really good as a capacity building measure for all our valuers. Thank you.
Sir, as always, I have got great appreciation for not only the coveted speakers, but also for the BBA office bearers as well, who take all the efforts in organizing these webinars and teaching across to various speakers and arranging them. Commendable, sir. And great. Really thankful to all the BBA participants and to the participants as well. And one more thing through this forum, I would like to share. Whenever I have tried to reach across to my BBA colleagues in the forum as well over WhatsApp messages and all, I have been getting very good helpful really inputs, which at times they are so good now. They really help you out in working out your reports and methodologies as well.
Sir, we also request senior members to give your viewpoint whenever youngsters they'll be posing some questions in the BVA group, and so senior members, if you can find time, if they can help us, no, then I think youngsters they'll take it forward. It's a great help.
Very true, sir. Very true.
So, Premnath sir, anything you want to suggest, or Premnath Murthy sir?
Yeah, thank you, Chandrasekhar. No, I was just thinking, picking up from where Abraham left off, that we have all our professional forums. There are so many of them, but there is a marked difference in BVA in terms of, I think, the participation of members, and in terms of consistently creating these experience sharing and knowledge sharing programs. As Subbarao pointed out in yesterday's session, not a single Saturday has been missed in these sessions. So that is something I think outstanding, remarkable, noteworthy, and commendable of PBA, which I thought this is a moment for us to recognize. Otherwise, we don't normally get time to recognize these things. We are always lost in our work. So that is the only point that I wanted to share, Chandrasekhar. And the creativity behind looking at the topics and creating opportunities for knowledge sharing like this IVS 2025 and the past topics that have come up in the knowledge sharing seminars on Saturdays, whether it is on ESG or valuation of intangible property or valuation of startups, or you name the topic and it's really there. So I think the minds that are working behind BVA and the engine that comprises of BVA, namely the members, phenomenal difference in a profession.
Thank you. Thank you, sir. All this credit goes to previous committee members. I think including Matthew sir was a founder supporter, and Subbarao, Shilpa, and many people are there. I think they're very committed. Thanks a lot, sir. Sir, if any suggestions are there, okay. Otherwise, can we request Raju sir just to give remarks, and also we can close. And with this, I think our third day we're completing. First day overview of a grocery and IVS. Second day we had a GKR session about general standards. Today SFA standard. I think today little because of some disturbance of the concerned person not available, we are able to manage. Maybe in the days to come, we may have some specialized sessions on Saturdays. We wanted to ensure that create some awareness among all the members. Contains 4 days in spite of in the month last month or March month schedule. So with this, our SFA 3 days is over. Tomorrow session will be on land and building, plant and machinery. If some persons are interested, they can join. Otherwise, it may not be SFA people. They can look at it, sir. Yes, President sir, can we proceed with the closing or? Yeah. Sir, Raju sir, you can just give the vote of thanks and we can proceed, sir.
Sure, sir. It's an honor to be extending my vote of thanks to Rajeshwar Rao sir and Dr. Raju. Both of them had been very encouraging for the insightful knowledge they had shared and the insights shared. Commendable, and keep on sharing all these good things. I, on behalf of all the participants and the BVA team, I extend my sincere thanks to Rajeshwara Rao sir and to Dr. Raju. Thank you.
Vijay will log off. Any feedback?
Yes,
Vijay,
sir.
can we log off? I think
Yes,
we have
sir.
another 7 minutes. I think we can.
Yes, sir. Can we end the session?
Yeah, I think looks there are no questions and also is completed. Mr. Ravindranath, we can log off, no? I think it's not there. Thank you, sir. Thanks a lot. we can close.
Thank you.
Thank you all. Thank you all. I thank Chandrasekhar and Shilpa to repose confidence in me and in last minute pulling me to take sessions.
Yes, sir.
After 2 years at Tejas, I have taken a session. Thank you all. Like it
Thank
gives me confidence to take more sessions.
Yes. Thank you.
I saw your chat on the Ajay Garg session. That is why we requested you to take this session.
Sure.
Okay.
Thank you, ma'am.
Thank you. Thank you.
Thank you.
Good night.